the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares nudged higher early on, tracking a positive start in Asia. So if we look at the Straits Times Index, it was up 0.11% at 4,311 points at about 9:39 a.m. Singapore time. And that is with a value turnover of some 266 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI ended marginally in the green, up just 0.03% at 4,308 points. In terms of value turnover, that's 1.32 billion Sing dollars. The gainers outnumbered losers 394 versus 211. Top advances for today, we've got for you BRC Asia, Jardine CNC, and Soybuilt Construction. And top decliners, we have here Moneymax Fin, Ascend Bridge, and UOB. Now, in terms of counters to watch, we have CapitaLand Investment, given how CapitaLand China Trust will subscribe for 5% of the 400 million IPO units in CapitaLand Commercial C-REIT, priced at 5.718 yuan per unit. Now, elsewhere from how Tokyo rose on the back of Japanese Prime Minister Shigeru Ishiba's decision to resign to how China's export growth slowed to the weakest in 6 months, we've got more international headlines in focus. Plus, how U.S. markets reacted to a disappointing set of employment data out on Friday night. Now, a lot to break down, and joining me on the line on a Monday is David Kuo, co-founder of The Smart Investor. Welcome back to the show, Mr. Kuo. How are you?
I'm very good. How are you, Tian Tian, more importantly?
Good. But I guess the most important question over here is how are markets faring? So let's start with the U.S. this time around. We saw a disappointing set of U.S. employment data out on Friday night. In fact, the Bureau of Labor Statistics said employers added 22,000 jobs in August. Unemployment rate rose to 4.3%. I believe investors are almost certain that the Fed will go for a 25 basis point rate cut next week. But how have equity markets reacted in response?
Well, I think investors are probably correct. I think the Federal Reserve will probably cut interest rates. As many of your listeners will probably know, the Federal Reserve has this dual mandate. It's got to ensure full employment, whilst at the same time, it's got to keep a lid on inflation. And I think what is going to go into this meeting is that they're going to be looking more at the labor market rather than the inflation. We know that there is still inflation in the U.S., but I think the Federal Reserve will probably believe that it's a risk not worth taking. In other words, trying to keep interest rates relatively high to try and keep a lid on inflation could damage the labor market severely. And as far as the markets are concerned, the Straits Times Index today, yes, only went up about 1 point today. But what we fail to realize is that many of the REITs did particularly well today. So we had, companies like Fraser's Logistic Trust, CapitaLand Integrated Commercial Trust, Fraser Centrepoint Trust. We had Star Hill Global. We had a whole bunch of REITs that were doing very well. And I think the market is probably at some kind of turning point at the moment, where they believe that there is a pretty good chance that interest rates have peaked and that interest rates will start to come down. So consequently, they're going to be looking at REITs probably more seriously now, and they think that is going to be the way that they're going to be able to derive some kind of income from their investments.
Okay. And since you're talking about the Singapore stock market, let's go to that. What is your overall assessment of STI's performance today? I mean, flattish. And you talked about the REITs to watch, but aside from that, any other notable sectors?
Well, I think what we're going through at the moment, Tian, is that people are kind of unsure because they know that there is inflation in the system, whilst at the same time, they know that interest rates are going to have to come down. And I'm not just talking about the U.S. The Federal Reserve having to moderate the interest rate expectations now. I think interest rates will have to come down because the world is in a turmoil. If we have a look at the U.S., when Donald Trump became president of the U.S., I mean, he promised a whole bunch of stuff. He promised that there would be high employment, there would be strong growth, there would be a period of low inflation. And those things didn't happen. So what did he do, Tian Tian? He went and fired the chief of the Bureau for Labor Statistics. He said that, they were fiddling the numbers. They were trying to make him look bad. And then now he's trying to blame the Federal Reserve and saying that, the reason why the unemployment numbers are going up and why the labor market is so weak is because the Federal Reserve didn't cut interest rates. I don't think any of that is actually true. I think the world is slowing down at the moment, and we know who's to blame. It's the Trump tariffs that's to blame. And so I think people are at the moment sort of very concerned because they know that there is inflation. They also know that many of the central banks around the world are going to have to start cutting interest rates in order to drive economic growth. So where do you go? If you are an income investor like myself, then you will say, there are very few places that I can go apart from into the stock market and start to look at companies that do have good, strong cash flows, that have pricing power, that can increase prices even in the face of inflation. And I think many of the investors around the world will be very selective about what they buy. So we're going to go through this period of turbulence, Tian Tian. So I suggest if you are an investor, Tian Tian, I would wear your hard hat now because it is going to be very, very shaky in the market for the next few months until we have some clarity.
Okay, and let's zoom in on some of the companies to watch, mainly CapitaLand Investment, because CapitaLand China Trust will subscribe for 5% of the 400 million IPO units in CapitaLand Commercial C-REIT, priced at 5.718 yuan per unit. What does this piece of news mean for investors of CapitaLand Investment, though? Okay,
essentially what is happening is that CapitaLand China Trust is going to be selling one of their properties, and that is going to be injected into this new REIT that's going to be listed on the Shanghai Stock Exchange, and it's going to be CapitaLand Commercial C-REIT. And so effectively, there's going to be no real cash expended there, and they're just going to be injecting this property, and they're going to be taking 5% of the new REIT that is going to be listed in China. I think that's probably not a bad thing because CapitaLand China wants to reposition its portfolio at the moment and try and move away from shopping malls into other things such as logistics. So I think this is a very clever move in which they will have an interest in this new REIT. They still will have a lot of interest in shopping malls, but at the same time, they will be able to diversify their portfolio. And as an investor myself in CapitaLand China Trust, it has been very disappointing for a while now, and I hope that this will be a turning point for the company.
Okay. And Mr. Kuo, a very quick one on Capital. This time, the asset manager plans to cut energy use intensity by minimally 20% on a portfolio basis compared to pre-retrofit levels through its sustainable urban renewal strategy. How significant is this for the firm where share price movements are concerned, though?
Oh, very, very good, because I think they are looking at the long term for many of the properties. What they want to do is to take older properties and apply this sustainable urban renewal project into those properties in order to try and make those buildings more energy efficient. Don't ask who over in America about climate change and about global warming, because who doesn't believe in it. He thinks it's all a hoax. But we over here know it isn't a hoax. And certainly I think in the case of Keppel, they also know that it's not a hoax. And they have to be more energy efficient if we are going to be able to sort of bring down global temperatures.
Okay. Now, if you're just tuning in, we're now in conversation with David Kuo, co-founder of The Smart Investor. Well, Mr. Kuo, across the region, all eyes are on Japan because Japanese Prime Minister Shigeru Ishiba made the decision to resign. That pushed down the value of the yen. So consequently, if we look at the Nikkei, it was up nearly 2% earlier. Question for you, how far will political uncertainties relating to Japan filter through to equity markets? Or would you say the country's economic fundamentals remain strong and resilient to these political dramas, if you would say so?
Well, Tian Tian, I don't think Ishiba has done a bad job. I think he's done a pretty good job. And I feel sorry for him. He doesn't have to resign. But he is an honorable person. I mean, he did a reasonable trade deal with America. He managed to bring down the tariffs on Japanese cars. But even still, he felt that it was important to resign simply because of the election losses. I mean, he lost the lower and the upper house. And the party wants a new chief, and they think that if they fire the existing one, in this case resigning, they'll be able to do better. I don't think whoever comes in is going to do any better because there is still inflation in the system, and it's going to be very difficult for whoever comes in. But as far as investors are concerned, we go back to what we said earlier on, Tian Tian. There is inflation in the system, and if you are relying on interest rates in Japan to overcome inflation, I don't think it's going to work that well. So many of the people are piling into the stock market, into Japanese shares, and they're hoping that those companies will be able to deliver to them the kind of dividend growth that they require in order to hopefully sort of lead a reasonably sort of satisfied life into the future. So, but there is going to be weakness in the yen until we know exactly what is going to happen.
Okay. Now, elsewhere, Mr. Kuo, China's export growth slowed to the weakest in 6 months as shipments to the U.S. plunged at a faster rate. So if we go by official data out today, sales abroad rose 4.4% in August from a year ago to $322 billion US dollars. This was weaker than the median forecast for 5.5% growth. That being said, how far is this a concern for investors looking at the Chinese market?
Well, I think what you need to do if you are looking at the Chinese market is to say, can China pivot away from export-driven growth to homegrown consumer-driven growth? In other words, are they able to actually get consumers in China to start spending money? Most developed economies, 2/3 of economic growth comes from consumer spending. That has not been happening over in China. So they will need to resolve that problem. But how many times have we said this, Tian Tian? The problem in China is the housing market. They've got to get that fixed. Until they get the housing market fixed, consumers aren't going to have the confidence to go out and spend money because they're going to be very concerned about the price of their property and whether or not they're going to be able to pay off their mortgages. So
would
a
it
lot
be
of
right?
things are happening.
Would it be right to then say that the export growth, as much as it is important, the fundamental, the structural problems are still at the housing market, and that has to be sorted out for other factors to have a meaningful impact on the economy?
Oh, I totally agree, 100%. They have to sort out the housing market. In any economy, many people are very asset rich. In other words, a lot of their wealth is tied up in property until they sort out that problem. If you have a piece of property that you invested in, either to live in or because you wanted to rent out that piece of property as a buy-to-let landlord, if that property is underwater, you are not going to feel very happy. And no matter what happens, you're going to be very disappointed. So China does need to do that. But I do worry that they don't have the firepower in order to try and solve that problem. So if they can't do it immediately, they're going to have to do it over the long term. In other words, it's going to take a long time for property prices to go back up again, and then the people will feel happy. So there is no instant fix for this. There is no turnkey solution unless, of course, the government wants to pump a lot of money into the property market. And I don't think they're able to do that. So it is going to be a slow burn at the moment. But as far as investors are concerned, there are other sectors of the Chinese market that are doing very well. I mean, the tech sector is doing well. EV, well, up to a point, it's doing reasonably well. AI, that's doing not too bad at the moment. So there are sectors that you can look at in China, but I certainly wouldn't be looking at the consumer market or the property market at the moment.
Okay. Now, further away, Mr. Kuo, let's talk about oil. 8 members of OPEC Plus, they have agreed to raise production from October by 137,000 barrels per day, much lower than the monthly increases of about 555,000 barrels per day for September and August. What are the levels to watch for oil prices then?
This is very amusing, Tian Tian, because I think what OPEC Plus wants to do is to increase the amount of production enough to satisfy you-know-who over in America, because you-know-who over in America wants lower oil prices. But at the same time, many of the OPEC Plus countries rely on oil in order to balance their budget. So they're not going to go the whole hog and try and sort of raise the amount of production by that sort of 550,000 barrels, But instead they're saying, okay, we'll just settle for 137. We'll increase by that amount. So that will satisfy the American president. But at the same time, it's not enough in order to drive oil prices high enough for America to go gung-ho and start drill, baby, drill. At the moment, it's more like drill, maybe drill, because many of the oil-producing companies in America are saying oil prices are still not high enough for us to invest in oil production and in the hope that we're going to be able to make a profit. So I think this is a kind of halfway house at the moment. So I think oil prices will probably sort of stay at the current levels for a while, and Donald Trump will claim victory that the amount of oil has been produced and maybe oil prices might come down. But OPEC Plus certainly doesn't want America to start producing oil.
And finally, before we let you go, Mr. Kuo, I believe we can take about 2 minutes with this one. We've got GameStop and Adobe's earnings in focus this week, not to mention the 17th session by the 14th National People's Congress Standing Committee taking place this week in China. So a lot of things going on. How would you prioritize what to watch?
I would definitely prioritize Adobe first, followed by GameStop, and then finally the National People's Congress Standing Committee. The reason why is because I want to know how Adobe is doing. With this AI at the moment, there are many of the smaller companies, very nimble companies, that are chipping away at Adobe's ability to sell the software that it wants. So things like image editing, many of the smaller companies are able to do that. So I want to see how Adobe is faring with regards to the competition from some of the smaller players in that space. So that's Adobe. GameStop, interesting. We all know it's a meme stock.
Yeah.
And a lot of people were buying GameStop for whatever reason, I don't know. But GameStop shares have come down slightly. Ultimately, its main business is selling software, game software. And it'll be interesting to see how they are faring with regards to their core business. Are people still going out and buying game software, or is the American economy slowing down and people are saying it's more important to put food on the table than it is to go out and buy software? So out of those three, I would certainly put Adobe first, followed by GameStop, and the 14th National People's Congress Standing Committee. I don't think a great deal is going to come out from that.
Okay.
There's not an awful lot that they can really do at the moment, and I don't think they're going to, as we said earlier on, try and save home buyers and push up property prices, which is what they really need to do.
I see. Thanks so much for the insights today, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.